And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to CPF, Capital Preservation Friday on the Market Prep, January the 13th. Friday the 13th. It just hit me that is the case. Friday the 13th. And I hope you're not superstitious, but welcome. My name is John Hoagland. Thanks for trusting me with your time. As always, focus here is accurate context, good risk management, and remaining patient. 7:30, the import-export numbers came out. I haven't really had much of an opportunity to see how those came out. We'll take a quick look here. Export prices down 2.6%, import prices up 0.4%. How those are going to react in the marketplace is still pretty much yet to be known as we digest those numbers. 9 o'clock today, we have the University of Michigan Consumer Sentiment, which might be impactful for us today. 9:20, we have a Fed member, Pat Harper, probably going to be harping for a little while today. But as far as other things in the markets and in the news, the U.S. CPI indicated slowing inflation, but still high inflation yesterday. Stocks are ticking lower after the banking sector earnings marked the beginning of the earnings season, apparently, with some mixed outcomes. The UK GDP surprises with a slightly higher than expected result. The US dollar hit 7-month lows yesterday on hopes for slower rate hikes. I'm seeing some of the talking heads actually thinking about rate cuts the second half of 2023. Now, I don't know how many Fed chair or Fed members would agree with that, but we can always hope. The VIX this morning below 20, but still a little bit higher on the day, 19.29 last I checked. The dollar off the lows from yesterday, but still relatively low at 102.44 yesterday at this time. The VIX was at 21.25, so almost, $2 lower than that right now. Dollar index yesterday at this time, 102.7. Dollars still lower than it was yesterday at this time. And the yield on the 10-year yesterday at this time, 3.49%, is currently at 3.48%. So we've got our day ahead of us. And as always, I ask that you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome on the Market Prep, recap, reflection, everything we do here. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. It's Friday, everyone. Happy Friday. We've survived another week, the first full week of trading of this year, and we look forward to always seeing your success. Good morning, Shaw. Good to see you this morning. First in the room, you win the prize. Scott saw and he conquered. Bear goes long. Good morning. Lacey's rolling around on the floor right behind me. She says good morning to you all. Andy Bleed, good morning. Alfred, with a question right off the bat here. Always welcoming these questions. Good morning. How many points do you typically use when setting stops? Well, it's going to depend on the product, of course, but if we're talking about the E-mini S&Ps, depending on market context, I'm always placing stops technically, not financially. Anywhere between 4 and 10 points is what I'm usually comfortable with. On extreme volatility, we may have to expand that risk a little bit more, but with volatility, the opportunities tend to be bigger as well. So just to answer that question, in the S&Ps, I mean, I can get in sometimes as cheap as 2 or 3 points. It really just depends on the situation and the context of the market, Alfred. But typically it's going to be around 4 to 10 points. Terry King, good morning. Laura, good morning. Rooster, great day yesterday. Let's see if we can preserve capital today. That's what that CPF is. In the title for the forecast this morning was Capital Preservation Friday. Bill Phillips, good morning. Mike Russell, Joel MB, JM. Joel's got another joke here this morning. Joel's always willing to help out. A man knocked on my door today asking for a donation for the local swimming pool, so I gave him a cup of water. Always willing to help out, Joel. I love the jokes. Caesar, good morning. Haggle Matters, Jason. Vince, good morning. Brody. Capital Preservation Friday, yes, and go Seahawks. Marcelo, good morning. Serenity Trader, good morning. Sarah Hall, prayers and love to you as well. Alejandro, Rob T, Brody. Rusty Golfer, my spirit animal. Pablo, happy Friday. Yeah, you got a couple of beers there for us, huh, Sarah? Nice. You're welcome, Alfred. Caprice 101, good morning. And DA, good morning. So, context. What is the market trying to tell us? We can see that or find that or hypothesize that by looking at the context of the market. Has it been moving higher? Has it been moving lower? What are the charts telling us? What are our indicators telling us? What are volume and open interest telling us? All of these things are things that we kind of keep in mind and try and use in our hypothesis creation, everything we do, because we don't know any outcomes and we can't guarantee any outcomes. Everything we do has to be based on something knowledgeable, some sort of educated guess, if you will, which is the definition of the hypothesis. Got a couple of hypotheses for us today. We're going to see that in the charts very shortly, but it's of ultimate importance to me to be consistent in the lens that I'm using to make the assumption of context. Context in itself is a hypothesis. We're looking for accurate context, but context can change. Markets can change. It's important to remember to be creative and to accept information that may be contrary to what we think. It's very easy for the human mind to discount things that it disagrees with. And seeing things in the market that tell us that, it's all part of the ability to develop the intuition to understand what the market is telling us internally, not just mentally thinking about it, just to being able to sense these things and then to be able to decipher the difference between what's really intuition, knowledge, and experience based abilities to act, and then there's the impulses, which are usually fear and emotionally based reactions that sometimes we don't even think about. One of the ways that I've found that's helped me to be able to decipher the difference between those impulses and what's a real intuition is to ask myself before I do anything verbally. Sometimes when my wife is at home, she's like, "What are you doing? Why are you always asking yourself, is this in my best interest?" If I take that 1 second, say that verbally, it takes those impulses, which we can respond to without even thinking about, into conscious thought, and then I can say before I do the same thing that I do quite often that never seems to work out. Those impulses, I can say, you know what, that's not. I know if I do this, I'm going to say right afterwards, why do I always do this? It never seems to work out. So. All of this is part of the psychology of trading, and we have Jared Tendler coming back next week on Wednesday at 3:15 for an hour-long session, question and answer session. We're going to be talking about his book, and it's a great opportunity for us to get another step closer to actually knowing ourselves better. It's so important to, of course, have market knowledge, but for us to succeed in this, we have to have a really good self-knowledge. So I'm excited for next Wednesday to have Jared Tendler back with us again. This is going to be an ongoing monthly session we're going to have with him, and I'm going to be looking forward to having all of you have the opportunity to hear him, to listen, and to be able to ask questions while he's with us. So we're always looking for more opportunities to bring these to you. We're working on bringing more and more of these things to you throughout the year throughout the year this year. And so I'm hoping you're going to be able to attend next Wednesday. It should be at 3:15, the end of the day. Markets are closed. You sit back, relax, listen to Jared, and have him answer your questions. It's going to be a wonderful, wonderful opportunity for us all. Again. All right. DA, good morning, Amol. Morpheus, I should say. Chart language. Yeah, we got a little bit of a pullback going on here in the S&Ps and the equities, right? Good morning, my brother Rick. Good, love you. It's good to see you as always. So this is it for the week. We do the prep on Fridays, and that's it. We don't do any coachings, make home money, or reflection at the end of the day. So this was going to be it for the week. Again, it is Friday the 13th. Don't let that scare you. And we're going to jump into the charts and see, what kind of context we are looking at. Potential accurate context, hopefully, and see what kind of hypotheses we can come up with as to what the markets are telling us. Here is the daily in the S&Ps to start. All right, so we've got some pretty good volume yesterday with that CPI number coming out. That was to be expected, pretty close to the highest volume since the March contract has become the front month. Open interest, however, is a little bit of a warning shot. We lost 8,300 in open interest. So when we're looking at the auction process, volume is higher. That's good for the auction process. Where this rally begins to get a little bit hollow is the loss in open interest. This is an estimation again of losing 8,300 in open interest. We had a pretty good boost in open interest. Day before yesterday of 27,000 increase. We lost open interest up here. That's a little bit of a hollow rally that we had here yesterday. The market is pulling back a little bit. It's inside extended trading hour range from yesterday. I'm looking at it as inside regular trading hour range again. But price is advertising lower in a market that in short time frame has upside structure, and that has not yet broken. Okay, we have price now advertising again below weekly kickoff low, 39.90. Did the market get a little bit too long to sustain this rally? Is a pullback necessary to even inventory so this market can eventually continue the move to the upside? As long as we don't break this structure today, and I think that would take a considerable move to the downside, I think we're setting up an opportunity to look for a longer time frame, of course. Here's the 30-minute chart. So this was our big boost in open interest with negative delta. This we assume was longer time frame buyers. Yesterday we also had negative delta here by the end of the day. We kept delta negative throughout the entire day yesterday, which would indicate potential longer time frame buyers. Now remember, these longer time frame buyers that we're looking at are outright naked long the S&Ps. They're trading this product against other products, options, outright stock baskets. So they're not standing here thinking, oh my gosh, we're going to lose all our money because the market's going lower. They're hedged. They may actually be hedged for a pullback. Technically, what we're looking at as far as possible targets to the downside, because we are now advertising price back below an important inflection level, that may create another situation where the longer time frame will want to adjust inventory. Overnight inventory, by the way, which is short time frame, weaker hands traders are short. Overnight inventory is short. So the Short time frame upside structure does remain. I mean, we're still putting in higher lows and overall higher highs, so that structure still remains. Where does it break? Well, I think that there's a couple of important levels here. Our knee-jerk stab to the downside yesterday, 39.54. Anywhere between here and this gap, I think, is important level to kind of think about putting a worm in the water, so to speak. This might be an interesting area for an execution, is what I'm saying. If we can't hold these lows, because we've got, the high here, the low here, the low yesterday, the low of the regular trading hour session yesterday, relatively tightly packed here. So that tells me that there's probably an opportunity there. Again, as far as direction is concerned, the short time frame picture is higher. The long time frame picture is, of course, lower. Let me straighten this out here. So the high we put in yesterday was really close to this trend line, which comes all the way from the all-time high, 1, 2, 3, 4, CPI rejection above, another test to it yesterday. So that makes sense that there's a little bit of resistance here, right? So the long time frame is still to the downside, short time frame to the upside. So that kind of gives us an idea of potential context. We're pretty high in the area of that trend line while still maintaining upside structure in the short time frame. It's probably likely to create some cognitive dissonance in us, but that's okay. We're here looking to see what the market is going to do as the market opens up. We've got overnight inventory again to the short side. Take a look at the TPO chart from yesterday. This is regular trading hour session only. The initial balance low is the low of the session. So we're kind of back into a situation where we're seeing that again, at least here in the S&Ps. The market attempted to move higher throughout the day yesterday, but each successive move higher was a little bit lower and a little bit smaller. The market struggled up here, but it's kind of a low excess high, and we have a high excess low here. This will come into play at some point in the future. Probably not today, but at some point in the near future, we'll revisit that high. Here's the gap that we have on the 30-minute chart. And then below that, there's the naked points of control down here. So if we can't hold this gap, I'll look for the market to come and check this rather prominent point of control here. There's a lot of TPOs in this point of control. And then, we've got to get down through this area. This is the area that I'm looking at. We get into the gap, that's going to extend that area. But I'm kind of thinking the market may fall into kind of a hangover type situation. We've come a long way. And then we got to see what the longer time frame traders do as this market opens up in regular trading hours. Would probably be an interesting day for make whole money today. We're working on expanding some of that. For the crude oil, we're set to roll next Tuesday, so we're in the deep teeth of rollover. Yesterday, we lost 1,000 in open interest overall. Yesterday was a day that seems there was a large move of contracts from the February to the March and future contracts in an almost even way. So it's going to make it very difficult to gauge performance on this market that continues to try and push higher above the weekly kickoff high. Price remains inside of the channel on the 30-minute chart. We'll see that shortly. We like to call it sometimes a Daniel. We are holding above weekly kickoff high, even with higher inventories. We had a 19 million barrel boost in U.S. crude stocks here last week, according to the EIA, and price has continued to try and push to the upside. So lots of talk about increasing Chinese demand in the market. if something should change about that, look out. Here's the 30-minute chart. Settlement 78.39. We're not really holding any overnight inventory. Overnight inventory got a little bit too long here prior to the open. We're back in range, back in inside value, and I'm going to suggest that that means we need to stay very patient. So just to get a little bit of a further away view, okay, this is the channel that we're referring to. On the daily chart, is this a bear flag? Because it's kind of contrary to the bigger picture to the downside. The high yesterday adhered to the upper part of it very well. We're holding above weekly kickoff high, which will be somewhat pivotal for us today. We have a small, tiny little gap from yesterday's session to Wednesday's session. That'll be interesting. We've got a naked point of control right here, and there's a previous point of control that goes right through the middle of that gap. So there's some visuals that are kind of possibly magnetizing price. But again, I'm going to stay really patient today because there's very little change in the perception of value at this time. And I'm going to think that may make better trade locations occur as the day goes on. The TPO chart here has neither the high nor the low at the extreme of the initial balance. It is a relatively even bell curve. Small range. I'm on alert for some sort of change to occur. Look at the overnight low. Look at yesterday's low. This is not a strong low. Not a strong low. And we don't really have deep excess on either side. The NASDAQ, similar but different from the S&Ps. The NASDAQ yesterday added 4,200 in open interest. Okay, we're in the area where the weekly kickoff high was in the S&Ps. We hadn't gotten here yet because we had to break out and hold above this week's weekly kickoff high in the NASDAQ. My question is, in these equities, have we just kind of gotten too long to rally? Looking at the earnings today, the banking sector overall exceeded expectations as far as revenue and earnings per share. There's a couple of hiccups there. Delta Airlines beat on both earnings per share and revenue. Now, there may have been some extra expectations that we're not aware of, but here's the NASDAQ, again, pulling off the highs. Price is seeking buyers at lower levels now in the equities. Where are those buyers? Well, we've got weekly kickoff low well inside yesterday's range. This could be an interesting opportunity for us. We're holding overnight shorts. We are below value. I always have kind of wishing levels or dream levels. Weekly kickoff low would be probably my dream level here. It's still inside range. It's in that same area where we're looking for opportunities in the S&Ps, perhaps. You know, we've got the stab to the downside after CPI yesterday that I'm also looking at in the S&Ps as well as the NASDAQ. But we're inside range. We expended a lot of energy, I think, yesterday. It is entirely possible that these equities markets could have a hangover day and just kind of range and digest everything that happened this week. I don't know. It is a possibility. They're not really in areas where I would expect that, which means I should probably expect it. Here's the TPO chart. Some days there's a lot of clarity, some days not so much. So here's yesterday's range. The initial balance low is the extreme from yesterday, but again, market is attempting to go higher, but it's not doing a very good job. Every range extension to the upside is a little bit smaller. We have kind of a weak high in the overnight. We're kind of weak low here in the overnight as well. But the market is overnight inside the range from yesterday. Is it going to stay? Are we going to have kind of a hangover day? I don't know. Looking for opportunities perhaps at these lows. We got a high here, got a low, we got a low, we've got a low. This whole area here looks interesting for an opportunity. Take a look at the gold. So the weak dollar yesterday really put a nice juice to the upside into gold yesterday, adding 3,200 in open interest on much higher volume, but due to the CPI, of course. But open interest and volume are indicating a continuing and healthy auction to the upside. The overnight test of weekly kickoff high proves to be too expensive, and the emphasis on that is it's the overnight participants. The longer time frame were not available overnight to adjust inventory, which is what these weekly kickoff levels are meant to kind of fish out, is possible adjustment in inventory by the longer time frame traders. Take a look at the 30. So we ended up the day higher, again on higher open interest and volume yesterday. Overnight inventory maybe starting to get a little bit long, but now the overnight is over. The market is probably going to go back up and retest that weekly kickoff high while the longer time frame participants are available to participate at that level. That's really going to be my focus this morning, if I'm not long on the way up to it, is to see how the market responds once it gets to it. Overnight, it proved to be too expensive. That could change. Take a look at the TPO chart. Already expanding above yesterday's high. Overnight high 1290. So 19 ticks through it in the overnight session. Anywhere up there is going to be an interesting area for an execution. Possibly. Overnight inventory again to the long side. Now, we got long, reconciled, getting a little bit long now, but again, this is the regular trading hour session. Do we have an opening range trade here? Not going to see it. All right, never mind. Mike, I see your... Is there a way to turn off the overnight hours? Yes, Hegel Matters, thank you very much. Yeah, I actually keep one of those on a different platform here. Here's regular trading hour daily chart on a different platform. I like your thinking there, Mike Fries. Let's look at the euro then now. Oops, that's not it. Here we go. Let's look at the euro. So again, a healthy upside auction is what we're seeing in the euro. Of course, that's hugely aided by a weak dollar. We added 11,000 in open interest yesterday on higher volume. That higher volume, of course, brought to you, sponsored by the CPI. Okay, we got an early uptick in the U.S. dollar, which kind of creates our pullback here. We got a pretty weak high from yesterday's session to the overnight session. Take a look at the 30-minute chart. So there's our move to the upside. Negative delta, increase in open interest and volume, longer time frame participants, right? overnight inventory is pretty short. You know, we take a look at where we started this last night. We started up here. We opened here. Opened here, I should say. Opened here. 7:30. So we opened here. We're still kind of piling in short. We're in range and value, so little change in the perception of value of the euro. Patience. Well, it's all I can say here is try and stay patient. Better trade locations are likely to come as the day goes on. A little bit of possible repair in this profile. It's a normal variation day with the lower extreme, the low of the regular trading hour session. We're in range, we're in value. No real big hurry to get involved in anything here. The 10-year. 98,000 contract boost on this breakout above weekly kickoff high. That's longer time frame buyers. Ladies and gentlemen, the weekly kickoff did what it was supposed to do. There was a spike in volume and bringing new participants into the market above that level marks acceptance. Rates have recovered a little bit from the drop from yesterday. Our overnight high it's an overlapping to higher overnight range. Take a look at the 30 here. So we did take a look above the high from yesterday. We've pulled back. There's no real overnight inventory left in this market, and we're in range and in value. Stay patient. What is this high volume node as the point of control and this high volume node up here being between them? There's a pretty good probability that we're going to trade to both of those high volume nodes. We call that repair. Here's the TPO chart. You can see volume here. You can see, well, this isn't presenting correctly, but there's a high volume node up here that we may have already kind of reached out to. It's a normal variation day with a little bit of distribution problems, and we're right in the middle of it. So we are repairing that as we speak. And we're also in range and in value, so staying patient is probably going to help with better trade locations as the day goes on. And my little pet project here. I can't just like drop this. I'm fascinated by this market. So balance seems to be forming at this low here. We only added 700 in open interest yesterday, which is largely inert. We're about 1 to 2 weeks from rollover, so it makes sense that it's starting to try and fall into balance, as that would assist our longer time frame traders from getting a cheap roll. Doesn't have to happen, but there is a tendency for that. Here's the 30-minute chart. Balance high, balance low. We do have a gap to the downside, and if we can't close this gap relatively early, I might look for a move down to the low of the balance area here. And the TPO chart. Here's our gap. Yesterday, no extreme on the initial balance. Both extremes of the initial balance were penetrated. We have more excess at the low excess high here, but that's now moot because we've got the gap to the downside. A little excess here, so I guess opening in range and value from Wednesday kind of gives us some short time frame levels to look for opportunities. Value low, value high. I don't really want to do anything here for some reason. Not that I trade this market, but just seems fascinating to me. I don't know why. I've got some sort of an affinity for it or something. But we'll have to move on from that. So, yeah, that's it for the market prep this morning. Happy Friday, everyone. Hoping you have a great trading day and a great trading week next week. Have a nice weekend. Get some rest, of course. I always tell you to do something nice for yourself. We work really hard at this, and we deserve a reward for it. Don't feel guilty about it. We work hard. You deserve it. Don't forget to be kind to others as well. Say a prayer for world peace. Take your deep breath with me. Stay humble, grateful, creative, and centered today in your trading. Capital Preservation Day. Get out there and profit today. Trade well, and I will see you Monday morning at 7:45 for the market prep. Have a great trading day and a great weekend. Blessings to you all.